Hi, Gene Trowbridge with the law firm of Trowbridge & A. We're securities lawyers, and we're going to have a discussion today on how to get started as a syndicator. And it doesn't have to be real estate. It doesn't have to be any specific property, although most of our clients are real estate. So maybe when you see what I'm going to talk about, you think I'm talking about real estate, but it could be anything. As I will tell you, last year we did a hockey team. We've done avocado grows. We've done hairstyling salon chains. We've done any number of things. The whole key is, do you need to raise money from investors? Because you've used all of your money, you've used all of your family's money, you've got all the bank financing you're going to get. So how do you get over the hump to get started or continue on with your business? Well, you look for other people to invest with you. So let's get started here. So one of the keys about me is I was a syndicator for about 20 years. I did quite a few syndications, mostly building self-storage facility. Most of my syndications had us building 2 self-storage facilities in the syndication. And I did that for a long time. I'd been a real estate broker forever. 40 years as a CCIM senior instructor. But when I was 45, I decided to change careers and I went to law school to do one thing. The one thing I wanted to do was to be a securities attorney, and here I am. So I'm an author of a book. The 4th edition is out, and I'll show you at the end of this presentation how you can get a copy. And I'm an old runner. I run a couple half marathons every year. Keeps me going, although Father Time is catching up with me. My times aren't as good as they were 20 years ago. So let's talk about getting started as a syndicator. The first 3 steps is, number 1, find someone to do this with you. The first question that an investor should ask when you ask them for money is, what if I give you my money and something happens to you? Well, you better have an answer for that, or you won't be able to raise any money. I do know that now with my 40 or 50 years experience in this business, that certain things happen to sponsors that you're not expecting. And if you don't have a plan for continuity, it's going to be difficult for your investors, and we want to protect the investors. So you should always have someone else in your manager LLC who can take over when you're not capable of continuing. And the lender's going to require that. If you don't have a second person, they have ways to create a second person to be responsible. And you probably don't want that because you don't know that person. So I think that's quite important. The other thing that's important, it just makes sense that you probably aren't good at everything. Maybe you're good at finding deals. Maybe you're good at money raising, but are you good at managing? Are you good at writing reports to investors? Are you an inventor? And you're good at inventing, but you don't know how to raise money and you don't know how to manage a group. Well, I think that one of the best things you can do is improve the ability of your business to be successful by teaming up with someone who has a different set of skills than you have. That would be important. Another step that you have to take at the beginning is to build a database. Quite honestly, you're building your database all the time. I have said in the courses that I teach on this, that if you had 50 people in your database that you thought you had a 50% chance of each one of those investing 50,000 with you, you'd be ready to go. Well, I wouldn't wait until I had my database filled up. I would start doing my work, whatever I was doing, my syndication, while I'm building my database. You're going to be talking to people about what you're going to do. You'll be trying to determine if they want to be in your database and if they want to hear about whatever it is you're doing when it's time for you to raise money. So 50 people with a 25% chance of investing $50,000 will give you $1.25 million when you go to bed and go to sleep and think about, well, what happens if I start raising money tomorrow? You'll feel comfortable about that. And you're going to find that that's a pretty good size of an investment to start your first deal with. If you can only find people that you think who might invest 25,000 with you, well, then maybe you need 100 people in your database. But once again, some of my clients decide they have to wait until they build their database, but that's not the case. You're always building your database. You never stop. You're always running into people who find out what you're doing. They see that you're successful. You'd like to share your opportunity with them, and so they want to be in your database. Find a specific property. Now, I don't mean a specific real estate property. It can be, as I said, we did a hockey team. We did an avocado grove. We found someone who was going to expand their chain of salons, someone who was doing a fiber optics cable company. But find a specific thing to do on your first time, which basically means don't try to do a blind pool. A blind pool means give me your money and I'll just go out and find something to invest in. That won't work as a beginning syndicator. You have to be able to show the investor, and this is a marketing question, you have to be able to show the investor exactly what you're going to do. And with that, they're more likely to seize the opportunity and invest with you. So now you've figured out a property or an opportunity, and we need to control it with a letter of intent or a purchase and sale agreement, or however you're going to control that opportunity. Then you contact an attorney like our firm that specializes in securities laws. And I'll talk about why this is a security. While you're doing all this, you alert your potential investors. Hey, I told you I thought I was going to be doing something. I found it. I'm starting to get my work done, and I'll be coming to you, and have your checkbook ready and have your pen ready, and I'll be coming to you in the next period of time, ready to ask you for money. Then you receive the documents from your securities attorney, and you read them and study them, and then you're ready to go out and ask the investors actually for their money. You can't take the money until the documents are done, but as soon as they're done, you can ask investors for their money. This is a structure of what you're going to be able to put together. And in this structure, we have something called investment LLC. It's an LLC formed to own an opportunity or own a property or own a business, whatever it is. It's formed to own something specifically. And in investment LLC, the members come along. That's what they're called. They're called members. And they invest in the LLC. They purchase interest in the LLC. And they're expecting to purchase interest with their money and then get cash distributions out through operations and eventual sale in return for their money. Now, because you're going to have a number of investors, a number of members, we're going to need someone to manage this. So we suggest a manager LLC. And remember, the first question is, what if I give you my money? What happens if something happens to you? We solve that issue by having more than one person in the manager. We make sure that the manager has a continuity plan. Okay, so the manager manages the investment, receives cash distributions and fees from investment LLC. You need to get paid for the work you do. Another thing you might find is you might need an enhancer to make your money raising easier. Sometimes when you go to the bank, the group here doesn't have enough credit worthiness or liquidity or equity in their personal statements to qualify for the loan. So you might need an enhancer to come in and give their financial statements so that you can get the loan. Sometimes you need to go out to securities brokers to raise money, Or if you're doing something that's a long way away, the lender's going to wonder, how is that going to get managed? If it's a piece of real estate, you're in California and you're buying something in Texas, who's going to manage it? Well, I think you have to have those enhancers available. Here's what I think a manager needs to do. A manager needs to go out and establish a market for themselves. And the first step a manager, I think, has to do is to find people who are interested in investing in whatever industry we're in. And let's take real estate, for example. If you're talking to people all the time and all they want to do is invest in Bitcoin and blockchain, well, they're not going to, and you're doing real estate, those aren't the people you need in your database. You need to find people that are interested in your industry first. The next thing you need to do is you need to find people who are interested in your specific part of the industry. Are you doing apartments? Are you doing industrial? Are you doing hockey teams? I don't care, but find people who are interested in that. And then the next thing you need to do is have a story about your management team. Who have you put together that can be responsible for turning this opportunity that you found for the investors into a real success? And then go out and raise the money. And I call that, in another video I call that sell the sizzle. Sell the sizzle of your industry, the sizzle of your part of the industry that you're a professional in. Sell the sizzle of your team, and then sell the sizzle of your deal. When I was syndicating, at least at the beginning, I did all that backwards. I got my paperwork and I immediately ran out to see if I could find investors. But I was talking to people who weren't interested in building a self-storage facility. My issue was I found people who were interested in real estate, but they were interested in current cash flow. And we're going to build a project, and our fund probably was going to do 2 projects, probably over a period of 2 or 3 years, and there was no revenue. But when they sold, everyone made a lot of money. So I needed to find people who were interested in equity buildup, appreciation, creating value through construction, rather than people who just wanted a current check so they could go out and supplement their income. So that's important. The industry, your phase of the industry, your team, and then you can sell. By the time you found someone who wants the first 3 things, when you do have an offering, it'll almost be like order taking for you. That's my experience there. So there's a lot of things to learn if you're going to be a syndicator. You need to learn about the fiduciary duties you owe your clients. You're going to learn that there's risk in this business, and how do you offset the risk with rewards? You're going to need to learn about the various entity structures there are. Are you using a corporation, an LLC, a limited partnership, a tenant in common? You're going to learn about the securities laws. You're going to need to learn about lending requirements, the IRS rules, accounting procedures, and investor relations. And all the things are in my book. Basically, these are the chapters in my book. And you can go to the website, go to this link, book.tnllp.com, and you'll get a free PDF of my book. While you're there, if you want to get a real copy of the book, you can agree to pay for the shipping, and we'll send you a copy of the book for free. Also, we can invite you to go to Amazon and listen to the Audible, where I've narrated the book. And that some people find that very interesting. I'm going to go back a slide here. I said I was going to tell you why this is a security, and I kind of skipped over that. So let's do that now. To make a real long story short, there was a Supreme Court case back in the early 1940s that defined the elements of a security. And this picture is a great way to show it. And a security is when investors invest something of value, money or something of value, into a common enterprise. Whatever this LLC is, this is the enterprise. So everyone is putting their thing of value, their money, into this common enterprise, and they're doing it with an expectation of profit. Not a promise, but an expectation. But the profits are going to be done through the efforts of the manager. So technically, it's an investment of money in a common enterprise with an expectation of profits through the sole efforts of the promoter, the manager. So this manager now is in charge of everything. This manager makes everything happen. So that's what makes it a security by definition. If there's only one or two members and you form an LLC to do your business, but you don't need a manager because the members are going to make all the decisions, that's fine. That's not a security. But the minute you get in a position where someone is going to be the manager, someone is going to be the sponsor, you have a security and you have to follow all of the securities laws. That's why you need to hire a securities attorney to draft your documents for you and advise you as you go forward. And all that is covered primarily what I just talked about in Chapter 5 of the book, the securities laws. So that's what I have to say right now in this short video of how to get started as being a syndicator. If you have more questions, just contact us. You can call us. You can go to our website and sign up for a 30-minute free consultation. I sometimes call those calls homework calls because you have a million questions to ask, and we're there to help you with your answers. Or you can subscribe to our YouTube channel and continue to look at the very many YouTubes and interviews we have in our YouTube channel and get a feel for what's happening if you decide to become a syndicator. So I hope to see you on another YouTube broadcast, and good luck to you on your plans to be a syndicator.